Hello and welcome to this budget special. My guest today is V. Anantha Nageswaran, who is the Chief Economic Advisor for Government of India. Mr. Nageswaran, thank you very much for joining us today on ET Now. Sir, the survey lays out a medium-term growth target of 6.5 percent on an average, and for FY27 we have a 6.8 to 7.2% GDP growth. What are the kind of structural reforms that we would need to push this target higher?
We did. First of all, it's the reform that we have been able to accomplish in the last several years are the key reasons is the reason why we have upgraded it from 6.5 to 7. Now, what would take us from 7 to 7.5 or 8 depends on addressing pending issues with related to land reforms, conversion of land from agri to non-agri use. Reducing cross-subsidization so that the input cost to industry becomes cheaper, and also at some point bringing in fuels into GST, etc. So and education sector, where we are able to move from enrollment to education quality outcomes. These are all the various reform areas that would help us take it even further. Back to you.
You also mentioned in the survey about the rupee depreciation, because we have seen rupee depreciating by nearly 6.5% since April. How do you see the depreciation, rupee depreciation moving from here on? Even though as of now it may not be a bad thing because we are countering tariff wars or US tariff war issues currently, so it may be a good thing for us because our exports get little bit of buffer in that sense. But going forward, given the fact that we have capital outflows, continuous capital outflows from the market, how do you see rupee from this point of time?
Look, I can't give you a forecast, and that's not my job either. All I can say is that yes, at this point it is not exactly disruptive, but whether it becomes disruptive or not, at what stage, it is difficult to be precise here. And we have also written about what it takes for a country to achieve strong and stable currency over time. So I think I'm not in a position to add anything more than that. Back to you.
Sir, one of the key, things which we have seen in the last many years of budget is the kind of capex spending which has been there. Do you think that there is a need to sustain the same rate of capex spending at 10%, or we can accelerate from here on?
Look, again, it's a matter of few days before you see the budget. I think we can all wait to see what kind of numbers we get.
One of the interesting fact which is there in the economic survey is the kind of state innovations which have been done in various schemes and subsidies. DBT for farmers, or for that matter, how technology has been used for many of the sectors by some of the states. Do you see going for DBT for farmers or for fertilizers, for that matter, would be a good way to bring in more efficiency?
No, I think we have written about it in a box item. It's important to look at the way we compensate farmers for fertilizer prices, whether how to do it in a manner that it helps soil nutrition to be elevated, etc. And also therefore restoring a certain different kind of mix. How it can be done is something we have written about in the chapter on agriculture, and that's exactly what you pointed out. So there are multiple ways of doing it, but it's important to make sure that we are able to nourish the soil and boost productivity rather than leading to a sort of a relatively mindless application of the fertilizer that is the cheapest. So I think there are multiple ways of achieving the outcome, and direct cash transfer is one of them.
If I look at one of the chapters, you've spoken about monetization of public sector banks. You've also spoken about the fact that maybe the threshold should be brought down from 51% to 26%, still retaining the control by the government. Is that feasible in the current scenario?
That we don't know. Our job is to highlight some of the possibilities that exist, but whether it is feasible, in what time frame and what speed, is for policymakers to decide.
Sir, The finance minister has been articulating that we have to move towards a debt to GDP, metrics from away from the fiscal deficit metrics. She's also pointing to the fact that many of the states have a higher debt component. How do you bring in this fiscal discipline with the states? Should the government incentivize in some format so that the debt to GSDP is within the limits for quite a few states?
No, I think it's not appropriate on my part to speculate on it at this point. It needs an application of mind. We'll wait and see what the Finance Commission has come up with, and then we will be probably able to have a conversation on this.
Another aspect which is of importance is the capital outflows that we have seen in the last 12 to 15 months. Nearly 22 to 22 billion dollars of outflows have happened. As a chief economic advisor, so what is the kind of policy measures that could be taken to ensure that there is a arrest of this capital outflows, whether through portfolio investors or through a foreign direct investors which is going out?
Portfolio flows are cyclical in nature. They come in and they go out. There are multiple considerations. Some of them are within our limits. Some of them are beyond our control. So we can only act on those that are in our control. If there are other reasons why they diversify or come back, it has happened over the years. It's not the first time. So I don't think we should exaggerate the importance. And also, our levers are relatively limited to domestic policy. We can provide tax certainty. We are not unreasonable in our tax rates. We can look at other processes that we do, etc. But depending on how they perceive about the market risk return trade-off and what they get elsewhere, some of them could be right, some of them could be wrong reasons. But there are multiple considerations. We can only focus on what we can do in the domestic policy space, and we are doing that. Some of these developments could be also because of geopolitical developments, in which case we have little influence over that, over the kind of choices that portfolio investors make.
Sir, I just want your assessment of some of the labor-intensive export sectors. How do you think they are faring, given the fact that there's a challenge with respect to the high tariff from US? Do you think that they've been able to get alternate markets and they've been able to sustain this hit which has come in for many of them?
Actually, yes, they've been able to do so, which is why I think on balance, we have been able to show incremental growth in our exports. But to what extent, I don't recall the statistics off the top of my head, and they are there in the economic survey as well. And of course, the latest European Union agreement will definitely give a big boost to labor-intensive manufacturing, footwear, gems and jewelry, textiles, etc. So as and when the European Union-India trade agreement becomes operational, it will give a very big boost to labor-intensive manufactured exports.
How do you see agriculture reforms from here on? Do you see there's enough room for more agriculture reforms so that we can bring in more efficiency in that sector?
Yes, we have written about it in the economic survey, whether it is respect to crop diversification or fertilizer reforms or giving more price certainty to farmers in export markets, etc. These are all the various ways in which we can boost agricultural productivity even more in traditional crops compared to what we have been able to achieve in allied agriculture sectors.
Sir, my final question to you is with respect to, in the last 1 year, we've seen the government, putting in, giving an income tax, cuts, which is there. There's been GST cut, which has been there. Have you seen the impact of sustained consumption demand coming back into the economy because of these incentives?
Yes, we have seen the impact, which is why we have been able to anticipate a 7% growth in private final consumption expenditure. Apart from the direct and indirect tax cuts and the low inflation have put disposable income in the hands of the public. And we should also not forget the recent big run-up in the price of gold and silver is also creating a huge wealth effect, offsetting some of the stagnation in the stock market that we have seen in the last few months. So I think there is enough catalyst at the moment in the economy for private consumption growth to sustain itself.
Thank you very much for joining us today on ET Now.
Thank you.
That was a Chief Economic Advisor, Anantha Nageswaran, who was giving us a perspective of the economic survey and the some of the features which are there in the economic survey, which has been put out by the government.